Thanks, David, for the introduction and a great review of the company. Super impressive. Going to hit three things today. I'm going to tell you who we are, a little bit about what we do for those who might be newer to the audience, and I think just as important, where we're going, where we see growth coming from. David gave you a little bit of an insight on where we see growth. I'm going to double click and give you a little bit more of that insight. So let's go ahead and get started. So this really represents sort of our business on a page. And I want to start with the top $7 billion number. That really is the reflection of the three things on the bottom right. Growing our core, which David talked about, hitting adjacencies, which is Europe for us, and really going after that connected vehicle opportunity. And we'll get into detail about what that opportunity represents, because it's a big ecosystem connected vehicle, and we're going to be clear on kind of where we're focusing. So we're excited about that opportunity to really participate in such a large industry. But let's jump down to the middle left. So we've delivered high single-digit growth for the last few years, up and down during COVID, but maybe some insight on that growth kind of in the most recent past. So rental car agreements with our customers are still down. They're not back to 2019 levels, but what you may not know is the duration has extended. Whether people are taking longer vacations instead of flying, whether people are getting their car fixed and there's a little bit of a supply chain slowness to getting their car out of the shop, the duration of those rental agreements is longer, and therefore the number of tolls per rental agreement is higher. And by the way, the number of violations is higher. The second piece is cashless tolling has picked up. During COVID, particularly in the US, we saw quite a bit of tolling authorities choose to implement all electronic or cashless tolling. And so therefore, users of our vehicles, or not our vehicles, our customers' vehicles, have less opportunity to stop and pay. So tolls per day are actually up as well during this period. Another interesting statistic is during COVID, last mile deliveries exploded. I think you're all like, that's all super clear, right? People went online, did shopping. And so we thought that would taper down a bit post-COVID, and actually we're seeing very strong performance in the last mile logistics business, and that continues to be a tailwind to our business. And then the last piece to give you a little color behind some of the historical and current performance is people are rebuilding their fleets. People are updating their fleets. Vehicles are still really hard to get, but our customers are getting real creative. And so our title and registration business is buoyed up by the rebuild and the refleeting and the build out of their fleet. So that's a little more detail behind that performance. We are a concentrated business. We're concentrated in the US, we're concentrated in tolling, and we're concentrated in RAC. And I hope by the time I get done here today, you'll see how we're looking to diversify that revenue stream. We think we're making good progress in many areas, but I'll let you be the judge of that, because we do want to diversify it and provide a more differentiated set of revenue flows. What's great about the business, and David talked about this for the company overall, we have some great strategic positions as a business. David mentioned how we've integrated, not just with the tolling authorities, DMVs, and issuing authorities, but with all our customers as well. And those integrations take a lot of work, are difficult to maintain, and create a nice moat around the business that we deliver on behalf of our customers. So that's one huge strategic advantage. The second is what people over the years, our founders, have done to build really differentiated cloud-based applications together with outstanding manual workflow processes so that we can do what we do efficiently and effectively and predictably for our customers. So we think that's a second very important strategic advantage. And those two together, as more fleets emerge, as more services emerge, as more complexity emerges in this ecosystem, we think we're super well positioned to take advantage of that. So a little bit of a deeper click into kind of our current business and what we're doing. So I'm super pleased to say that over the last 12 months, we delivered $289 million of top-line revenue. It's a record. Never in the history of our business have we delivered that much revenue. And by the way, the $185 million in adjusted EBITDA is also a record at a healthy 64% of sales. So we're pleased that as some of those tailwinds that I talked about earlier are buoying up our business, we're seeing that performance emerge as we exit Q1 2022. I think the thing I want you to take from the middle of this slide is what we do at scale. That's what we bring to our customers. We bring them the ability to process lots of things at scale. And by the way, these are 2021 numbers. So these are not what we did in 2019. We did more violation transactions. We did more title and registration. But we still did a lot in 2021. Almost 7 million violations being processed between Europe and the US across 8,600 issuing authorities. By the way, with about 450 of those electronically connected. And those are the biggest ones that we electronically connect to because that provides us the best efficiency to process those violations. We have 50 states covered for TNR, and I'll talk a little bit more about TNR. It's far beyond just title and registration, but we do have coverage around 50 states, so we can provide that service to our customers. In Europe, our current approvals with APPR, with EATS, and what we announced the other day with ATIS allows us to toll successfully 22,000 kilometers of toll roads in the top 5 tolling countries in Europe. So we're well positioned in Europe as we make progress there, and we'll double click on that and talk more about it. But here's what's really impressive. On average, we process 600,000 tolls a day, frictionlessly, through those proprietary applications that we run, the payment systems that we run, all happen frictionlessly. And we do that on behalf of our customers. And I think the key here is we're really, really well positioned to scale this business even further. We've demonstrated that we know how to scale, and we can bring more to it. We do that, by the way, across 13 offices here in the US and Europe, just over 300 people. And we have about 5.8 million vehicles enrolled as of the end of last year. So hopefully that gives you a little sense of the business. I think the question is, who counts on us? Well, if you're a large fleet, you count on us. And David said something that I thought was really important for me to say as well. And we've had relationships with these customers for decades. You know, we've been in business with these customers. We've grown with these customers. We've solved problems with these customers. Top rental car brands we do business with. You know, not all of them use all the services and solutions that we have available, and that represents still a growth opportunity within the rental car business. For those who aren't familiar with fleet management companies, they sell on our behalf to fleets. They package our solutions with other solutions that they offer their customers, and they've been an outstanding set of partners to access a bigger channel of vehicles than we could access directly. So we really enjoy our relationship with the fleet management companies, but we do have direct relationships as well. You see a number of OEMs up on the slide as OEMs start to think about the fleet industry and how they want to participate. You see banking and leasing companies as they think about how to manage costs that get associated with vehicles that they're leasing and financing. And you also see this emerging car share industry, whether it's Zipcar, Getaround, or others. You know, that emerging, you know, reserve and use model really plays well to the business model that we have out there. So we really appreciate the customers that trust us and give us the ability to deliver the services and capabilities that we deliver. So you kind of have, when you think about like, well, so what did these fleets do before we came around? So I want to give you a little bit of background. David hit on this lightly. Sort of what do we do and why do they pick us? And you have to go to life before Verra Mobility, right? These assets, these vehicles, they do a job, right? They take a family on a dream vacation. They get a business person to a customer meeting. They help logistics companies get that last mile done. And while they're doing what they do, both the driver and the asset, costs get associated with that asset and with that driver in some cases, especially if it's a violation. And so before us, those customers, the fleet owners, would have to deal with the right side of the screen. They'd have to deal with the fact that there's 129 tolling agencies to interoperate with, to understand the rules, the requirements, the changes that go on there. We work with over 8,000 issuing authorities. There's actually more. And we have integrations with over 450 issuing authorities. So knowing what to do, how to process a violation, how to do transfer of liability, super hard, right? And that's something that they had to figure out how to do before we got here. And then, of course, every state and sometimes counties within the states do title and reg differently. So before Verra Mobility came along, for many of our customers, this was just a cost of doing business. This is just what they had to do to be in the fleet business. So you might ask yourself, what's a fleet owner to do? We all know the answer, right? There it is. Here it comes. Whoop, wrong way. Work with us. because we allow them to do a single integration of their data with us. We allow them to share their customer information, their fleet information, and we take care of all that complexity on their behalf. We take care of all the changes that go on with tolling authorities, all the roads that increase prices, decrease prices, all the changing rules of how issuing authorities want to manage violations, tickets, and parking, and red light. And we just take that off of their hands so they can do what they do, which is rent cars and make customers happy, help logistics companies get things done. They get to do what they do well because we do what we do well. And we think we do that at scale, and we do that in an end-to-end way for our customers. Now, many of you know us as a tolling business, and it's fair because it's a highly concentrated part of what we do, but we're really a full-service provider to our customers. Even in tolling, we do more than just process tolls. We do over 800,000 calls in our call center, supporting our customers, making sure the customer's experience, their customer's experience, is outstanding. We manage transponders, tens and tens of thousands of transponders, making sure they're in the right vehicles at the right time in the right location. We provide data analytics and reporting because our customers want to know, especially our fleet management customers, how to make sure the right people get the right data, get the right payments, get the right tolls, get the right invoices. So we provide a lot more than just the tolling on the tolling services side. On the violation side, in addition to billing and collections and processing the violation, we also make sure that based on various rules with issuing authorities and municipalities, we make sure we can help transfer liability so that the end user who wants to disagree or take that to court or whatever, we give them the ability to handle that liability where it's applicable. And then in title and reg, titling a car and getting it renewed is just a small part of what we do. We do temporary tags, we do plates, we do IRP for large vehicles. We really offer a full host of services for title and registration, and that's why we really try to bring a full service approach to our customers, not just a transactional approach. And we think that creates differentiation. And in fact, we think it creates real benefits for our customer. And I think the obvious one, and we'll see this in a customer case next, the most obvious one is we save customers money. We save them administrative costs. We save them from violations that didn't have to happen. So we save them real money, and you'll see a customer example next on that. If you own a fleet, the most important thing is what? It gets on the road, and it stays on the road. And so compliance is important, whether it's title and registration compliance or whether it's when a violation does happen, that violation gets taken care of in such a time that that vehicle isn't going to get stopped and pulled off the road and pulled out of your fleet from being able to use it for either logistics purposes or rental purposes. We think the driver is an important element of this as well. As a driver, we pay the toll on your behalf. We help you take the most expedited route to where you want to go. If there is any violations or anything, we take care of those on your behalf. You don't have to go online 14 days later, find the gantry you're at, figure out how to email your toll in. We just take care of that. So we want the driver experience to be great. And David mentioned this, and we probably don't talk enough about it, but think about all those digital integrations that we have. Think about the fact that people don't have to stop, idle, pay a toll. Think about all the mail that we eliminate, and all the trucks and logistic, and all the printer ink that doesn't have to be used. We have a real impact on our environment, and it's a very important part of the value we bring not only to us as a company, but to our customers as well. So we're super excited about the capabilities we've delivered as a full service provider. So here's an example. This is a medium-sized fleet, 2,300 vehicles. They're clearly in a tolling region with 134,000 tolls on an annual basis. And you see on the right here, prior to us participating in their tolling ecosystem, that's how much they spent managing tolls. Not paying tolls, managing tolls. We pay tolls, they pay tolls, it all passes through, but managing tolls. And with our involvement, reducing their administrative costs, reducing their violations, helping them make sure that if the driver, especially if it's a fleet driver, is using the vehicle for personal reasons and not for business reasons, we know how to parse a personal toll from a commercial toll. We've dropped the cost for that customer quite significantly. And we think there's benefits that the driver gets out of this as too. They can take the most optimized route. They don't have to do expense reports. Just everything gets a little less friction oriented and more frictionless for the fleet company itself. Lower cost and better driver experience is the way to look at it. So we really do bring customer value. Now I'm going to sort of pivot here give you a little bit about who we are, what we do, who uses our equipment. I really want to pivot now and talk a little bit about where we're expecting to see growth. And it's really across the same three business vectors David talked about: the core, global expansion, and emerging opportunities. And let me hit one of these. I'm going to hit each of these in detail, but give you the punchline on each of these. We are not serving all the fleets that are to be served with our services in the US or Europe, period. And you'll see the data behind it. So there's more fleets to go get. We are not selling every service to every customer that we could be selling. So there's more services to sell. And there's emergence of new violation types, new road usage charges, new types of ways to monetize infrastructure that we're early participants in. So there's more to go get. I call it full potential. There's full potential in our core business, and we're going after that. Now, in Europe, I joined about a year and a half ago, and I know Europe, there's been a lot of talk about what we're doing in Europe, how we're getting to Europe. Let's just be super clear with you and the virtual community. We're behind where we wanted to be. There's just no question about it, right? We think there's more to go get and more to do. I'm going to talk about why, but the two biggest reasons are, one, cashless tolling or all electronic tolling has emerged slower than we expected. And as you can imagine, if you could stop and pay a toll, there isn't a lot of complexity to hook up the toller and the toll if people stop and pay the toll. Now that's changing as electronic tolling emerges in Europe. It's emerging at a slower rate than we had anticipated. And COVID has been a real impact. I think Europe, we kind of all see, came out a little bit slower than the US did with COVID. And so many of the pilots that you've seen us announce in Spain and in Ireland and elsewhere, we would have hoped those would have started in kind of second half 2020, early 2021. They didn't. But they're now starting up, and we see that flywheel kicking in again. And we'll spend more time on it. By the way, our violations business is doing just fine. It's the biggest business we have in Europe, and we'll talk a little bit about what we're doing there to grow that business. And then David hit on the emerging opportunity of connected fleets. We really see two areas of connected fleets important for our business: vehicle payments and new services that emerge from that connected vehicle, and we'll talk about that. I think the other thing to point out on this slide, David showed an aggregate of sort of the new growth opportunities being about a 10% CAGR. We see connected fleet actually being a little bit more at about a 14% CAGR and from a solutions perspective. And what is important to balance that with is the 19% you see on the slide. That's the speed at which cars are getting connected. You don't have a connected car, aren't going to be a lot of connected fleet services being available. So the combination of growth in the connected vehicle space and growth in the connected fleet solution space is sort of hand in hand. So I'm going to double click on each of these a little bit more. So our core business, tolling, we know that's our core business. It's a big part of what we do. I call your attention to the right side of the screen. You see how much all electronic tolling has grown from just 2019 to present, but it's still kind of in the 64, 65, 66 range. So there's still more to go get, and that's tailwind to our business because people aren't stopping, they're not paying tolls, and as a result, our services become more important. Now, you saw something we announced yesterday with the Transportation Corridor Agencies, or TCA, which is an agency out of California. We're partnering with them to really identify how tolling, how road usage charging, and how other costs that get associated from infrastructure to driver. We're working on a pilot with them to look at things like infrastructure as tolling, to look at things like how can we use blockchain to exchange personally identifiable data in a secure way so that we can process tolling differently than we do today. And I think that just is a demonstration that we're not waiting for something to happen to us. We're actually on the cutting edge. And by the way, I think this is one of the first partnerships we've done with the tolling authority in a really long time. So we're super excited about that and identifying emission zones, congestion zones, clean air zones, et cetera. And then there's more toll roads going in across North America, and we think that provides tailwind just to our tolling business. Now, for the next section, I'm going to call your eyes to the shale at the bottom right of the screen. So if you recall a few slides ago, this is non-rack TAM. So this isn't the rack business where we have very, very strong market share. So we have about 3.2 million units out of that 12 million that we participate in today. Sort of some upside to go get there, right? And I'm super excited about what we announced yesterday, which is we've now enabled all of our infrastructure capability to support nationwide tolling with a single transponder. We have not had that capability. We've had it regionally, but not nationally. And you might go, well, what does that provide you? Well, it provides you minimally to open up that 2.7 million unit OTR business that we haven't participated in, because they have a need for a single transponder to be able to operate to get the best tolling costs across the country. So it opens up that segment. Also, our announcements with Reviver and Car IQ, we'll talk about each of them in relationship to the core reason we put those partnerships together, but the partnerships also include them being a channel to resell our tolling services, and we think that's going to help us both in the commercial space and the small fleet space. So we continue to look for innovative ways and invention ways to get into more of that 12 million units in our core business, things that we have a right to go do. And then on the compliance side, I mean, I think we know that we're far from full potential in TNR. It's a highly fragmented industry done differently by state and sometimes by county. Industry would really benefit from scale, and we see that as an opportunity. But I think it's also important to point out that technology can intercept this industry. Our partnership that we announced yesterday with Reviver, who's doing really innovative things to bring digital plates to the industry. They're now, I think, running in California, in Texas, in Michigan. I think there was an announcement in the last week that they're going to be approved in Colorado. We're doing the title and registration for digital plates. So an emerging new technology space, we're front and center partnering with them and helping them be successful at what they do. So we're super excited about that. So hopefully once in looking at this slide, you realize David's right on. There's more to go get in the core business. Now in Europe, I had a bit of an introduction on Europe. I'm going to call your attention to the right part of the screen. So we're behind, and we're behind for I'm not a big excuse guy, but we're behind for the reasons that it says on the slide. COVID didn't help us, cashless tolling, we're trying to get going faster. By the way, the announcement we made with ATIS, and I'm not going to try to remember the full acronym, so you can go look up the press release, but the announcement we made with ATIS gets us a seat as a member on the industry association that's driving all electronic tolling for Europe. So we're not sitting on the sidelines kind of waiting again for it to happen to us. We're in the driver's seat. We're working with other members that are from the EATS community to really drive how cashless tolling emerges in Europe. And we're really pleased to be approved as a member of that and excited about that opportunity. In the rental car space, we've announced a couple of pilots that are underway, both in Ireland and Spain, and I can tell you they're doing just fine, and they've actually been renewed, both of them, in the recent past, so we're super excited about those pilots continuing. We know that vehicle supply continues to be tight, but similar to the US, we see that emerging. We also, by the way, we copy-pasted our transponder management that we do in the US. We now do that across Europe with an amazing operations team who services our rental car customers quite well. On the fleet management side, the tolling pickup, similar to the rental car space, it's emerging as cashless emerges. And by the way, we're not just waiting for cashless. There's still a benefit to our customers for not having to stop and pay a toll, because gates will still go up if they have a transponder. So we're working with our customers to really help them understand that value proposition. Violation management in Europe is a little bit different than it is in the US. Many times the owner of the violation isn't the vehicle owner, it's the person who is actually driving the car. So we're working on how to better serve the FMCs in that space. And we think some of the things that we're talking about emerging in parking and charging and vehicle payments will be great new opportunities to serve the FMCs. And then in the violation space, we made a couple of announcements yesterday as well. Dartford is a customer of ours. That's a renewal of a contract that we've had. But the Clean Air Zones is something very innovative where we're helping the UK associations, and there's a number of them in that announcement, helping them really enforce clean air zones where we already do congestion management and low emissions management. We're helping them enforce clean air zones. And I think it really points to the creativity of our violations business, looking for new opportunities to intersect what we do with what municipalities and governments are trying to do. And we see emerging opportunities in things like civil speeding, in things like domestic violations. So we're really excited about where we're at from a violation perspective and where we think we can go with that business. And then finally, David talked about this, the connected fleet. I've been a big believer that kind of the own and hold way of purchasing vehicles is going to give way to the reserve and use way. We already see it in micromobility, right? Bikes and scooters and picket. And we're starting to see it with companies like Turo and Zipcar and Get Around. We think as that reserve and use grows as a model, there are going to be more needs for the services we provide today. I'll give you an example. At IBTTA last fall, which is a tolling conference for those not familiar with it, there was actually a master home community developer. In fact, you may remember this, a master home community developer who was talking about as they're planning these master plan communities of the future, they're actually thinking about whether they should be building garages or parking spaces to host fleets that are actually owned by the homeowners association. So if, like, I was moving some mulch this last weekend, it would have been great to have a pickup truck to go move mulch. And if you're taking your kids to an amusement park and your family, it'd be great to go grab an SUV. And if you're going on a date with your significant other tonight, pick up a sports car and go have some fun. So I don't think it's far-fetched to believe that more fleets and more fleet types are coming, and maybe new types of fleet owners are emerging. So we think this explosion of fleet vehicles is on its way. I'm going to skip to the bottom one, which is the connected driving use cases. So you may have seen an announcement yesterday with us and CarIQ. And if you haven't studied CarIQ, it's a really innovative company. They basically have an innovative payment platform where the vehicle is the payment platform. And we've partnered with them to integrate our tolling solution with their payment ecosystem. And we're super excited about that first step in the partnership that we have with them. But they are the essence of a connected vehicle. They are the essence of using the computer on wheels, right? I mean, Mike and the team have heard me say this. I mean, a car is really a data center with a big battery pack that happens to have 4 wheels, that happens to have 5G connectivity, that happens to have lots of sensor data. As soon as we as an industry start viewing it as a computer and a data center, then all of these services and all of these capabilities become available to us. And so the services that emerge from that, like vehicle payments, like charging, like parking, like how do we manage violations, the connected vehicle, the connected fleet, prevents, I think, just amazing new opportunities for us to participate in the industry. So with that, I want to leave you with just the following 3 things. Our core business is outstanding, and there's more to go get. And we know how to go do it, and we're focused on it. Number 2, Europe, although the thesis is maybe a little behind, we think it's a still attractive opportunity, and we're working like crazy there to grow that business. And we're super excited about the connected fleet, as evidenced by what we're doing with TCA, as evidenced by what we're doing with CarIQ. We're not just sitting on the sidelines thinking about connected fleet. We're out there playing, and we're doing, and we're learning, and we're partnering, and we're participating, because we think that that really represents a great future. And with that, I'm done, and I'm going to introduce John Baldwin to talk about our government solutions business. Thank you.